The best way that you're ready to make sure you can execute at your best in the stock market is to have a structured plan telling you how to approach that coming week. In this video, I'm going to talk to you about how to prepare for the next week in the stock market. What's going on, guys? It's Christian from Stock Hours, and today's video we're going to talk about how to prepare for coming weeks in the stock market. So something I do every Sunday, I'll go back and I'll review how I did the last week so that in the coming week I know how to approach the market, any adjustments I need to make, anything I need to keep doing or anything like that. So that's what today's video is about. So the first thing that you want to do to make sure you're approaching the market the right way and adjusting to how the market is moving is by reviewing your trades of the last week. So some things that you might want to take note of are what are your best performing stocks, what are your worst performing stocks. With that information, you might see that, for example, maybe the smaller cap stocks or the stocks with wider spreads, you might not be doing as well on versus the big name stocks that you're getting in and you're basically break even when you get in. You're not down 5-10%. So that's going to be the first thing to note is what stocks you're performing best and worst at. Sometimes there's no real correlation, so it's not always something to make a specific adjustment to. But if you do see some trends in the right way or the wrong way, then it's something to note and something you want to keep in mind for the next week. Now, the next thing that you want to pay attention to is how you're performing at different times of the day. So for me as a scalper, I like to trade when there's high volume. So I'm typically trading the first hour of the market. Now, with that being said, there are times where I need to let the first 5 to 10 minutes play out and then look to execute past that, because maybe in the first 5 to 10 minutes it's very hard to read price action, especially in certain market conditions. So letting those first couple minutes go by, don't take any trades, just watch, see what's happening, and then look to get your entries. That can be helpful in preventing yourself from taking a lot of stop losses. Something I see pretty often is that people will take these first minute trades. There are certain conditions where it works out, but there are also certain conditions where it's something you want to just overall avoid. So it's something you want to see week by week. If you're performing well at certain times, not well at other times, keep that in mind. Maybe even make a rule if you see it's pretty dramatic of a change. First 5 minutes they're all red trades, for example. After that it's all green. Then obviously that's something to consider in the coming week. Now, the next thing that you want to definitely take note of is what your average win versus your average loss is. Ideally, your average wins are going to be bigger than your average losses, whether that's in a percentage amount. So, for example, if you're making 10 to 15% on your average win, but on your average loss you're losing 5 to 8%, then that's okay. Now, let's say you're making 10% on your average win, but you're losing 30% on your average loss. There's something that obviously has to be adjusted. That's not going to be a profitable strategy over a long period of time. So that's going to be something you want to find a solution to in the coming week and coming weeks. It's never something that you want to have in your trading is bigger losses than wins. So that's something to keep in mind. Another thing to go with that, so percentages obviously are going to work no matter what your position size is, but the dollar amount is going to change depending on your position size. So if you see that you're green $100, green $100, green $100, and then you're red $400, and then you see that your position size was 5 times as big, that's something to consider. You want to go back to having consistent position sizes. This way, if you take a loss, it's not going to wipe out all of your gains. So that's another thing to keep in mind on how you performed in the last week. Now, another thing that will be important to take note, and this is, obviously going to be changing every week, is were there any outside factors that may have affected your performance in the market? So a lot of people, day trading isn't their main thing, so they have, side jobs, they have 9 to 5s, a whole bunch of things that you can be doing, side businesses. If you find that what you're doing on the side is, there's a lot going on, it's a very stressful time of the year, anything like that, that stress might, you know, reflect in your performance in the market. So if you know that you're working 12-hour days every day, it's kind of taking a toll on you, you're not getting as much sleep as you might normally get, and then you have a red week, it's something to consider, if you might even want to sit out and focus on, your side business, your side job, whatever it is that you're doing that's causing a lot of mental stress. Because obviously, day trading is a very psychological game. If you're stressed outside of the market, it can easily, translate to you not performing at your best. Maybe slipping up on a stop loss, being hesitant on an entry. There's a whole bunch of things that could happen. So if you find that there's outside factors that are holding you back, it's something that you definitely want to see if you can find a solution to. Maybe, um, asking your job if you can change your hours or something like that. It's obviously going to be different on every scenario. So, definitely something that you want to keep in mind. Now, the next, important thing is going to be analyzing your trades in depth. So, what we did before, this is just doing a quick review. These are easy stats to get. You don't have to really do much thinking to see, your average win or average loss, or, if you're green in the first 30 minutes, but after that, you're red every time. That's obviously, not too much thought goes into that. This is more in depth analyzing what happened last week. So, there's going to be certain setups that you're going to find you may have done very well at. So, for example, it could be, um, just an easy example. You did well, doing bull flag breakouts, or you might be doing well on rejections last week. Obviously, depending on your style of trading, there's going to be a lot of different things here. Another thing to go with that is going to be, what did you struggle with? So there might be certain, you know, um, setups that you might not have done well at. For example, consolidation breaks. Maybe they didn't work out for you this week. So in the next week, you might want to scale down on those specific setups. Bullet bear flags, kind of mentioned that before, rejections. Now, holding to target, that's something I find myself adjusting pretty often. So out of everything in my system, that's one of the most common that I'm adjusting. So there are certain market conditions where taking the scalp is more profitable than holding to target. And then there's certain market conditions where you just get a lot of continuation. So it's worth holding to your targets. Um, this is why reviewing your trades every week, reviewing how you performed, is going to help you adjust to changing market conditions. So there's going to be times where, for example, like right now, tech is having earnings. So last 2 weeks, um, there's a lot of big name companies with earnings. So you might get a lot of big moves. Then there might be times where, for example, there's economic news happening. So the days leading up to that, the market might be choppy. Um, Scenarios like that, it's going to be important to look at your past data to see, you know, how should I approach this market? Should I hold to my target? Should I get an early entry? Um, should I wait for my key level to get in? All these different factors are going to be something that you want to analyze in how how you've been trading for the last week or the last couple of weeks. Now, the next thing I want to talk about is, on your red trades, what was missing that might have caused you to stop out. So there's usually, one, two, maybe three factors that, um, cause the trade to not work out. So some examples of this could be lack of volume, Maybe you just had an invalid key level, so the level you thought was important showed no importance during the trade, and we just kind of chopped around. For example, maybe it was too overextended on your entry, so it had a pullback, you stopped out, then maybe it came back and then it worked out. So maybe your entry was just invalid. It could have been a correct key level, but you had to wait for a bounce or something like that. Another reason why a trade might have not worked out is the market was moving against you. So if you're looking at calls and then you see the market's dumping, yes, it could be a divergence trade. However, if the market continues dumping, there's a good likelihood that it's going to take your stock with it, no matter how strong your stock is. And then one of the most important things is going to be, did you break any of your rules in the last week? Whether you came out green or red, it's important to note whether you broke any rules, or if you didn't and you stuck to it, and you found that one of your rules kind of held you back. Also, something to take note of. This is where adjusting to certain market conditions comes in. There might be times where you have the right principles, but it just needs a little bit of tweaking. So that's going to be something where you're going to kind of reflect on here to see if your rules are still valid with how the market is moving, or if it needs slight adjustment. So for example, for me, there's times where I tell myself no trade in the first minute, and then there's times where I can kind of take that rule out of the picture and then take those trades in the first minute given certain conditions. I'm not just going to take anything, obviously, but that's based off of the certain market conditions and my performance in those market conditions. I'm going to be looking at my rules and see if something needs adjusting so that I can be more profitable and be more consistent. To go with that, adjustments, things to avoid in the coming week. So after you analyze your trades in depth, you're going to want to look for common factors that have allowed you to be green, or took away majority of your losses. So like I said, maybe you were breaking rules and that caused you to lose a lot of money. Obviously that's going to be something you want to keep in mind, something you don't want to carry into the next week. Write this down so that don't take a first minute trade, for example. Don't take trades when there's no volume. Don't take trades when the market is moving against you. Whatever it is that your rule is that is taking away from your profitability is something you definitely want to identify as quickly as possible. So I do this every week. This way I can stay on top of how my trading is going. Another example is maybe the first 5 minutes were all red. Consider waiting to take your first trade. Kind of similar to what I was just saying. So those are on things to avoid. So maybe another example is you want to avoid the small cap stocks that have pretty bad spreads. There's obviously certain conditions where that's not going to be worth trading, so that might be a reason to avoid something. So you might just trade big name stocks for the next week, and then after that week go back at your trades, go back to see how the market moved, and then reassess if you want to keep that or change it. So maybe it was just one bad week of those small cap stocks, and then you can go back to regular. Whatever it is, the more you journal and identify, the better your results will be. And then on the flip side, things to look out for. What are specific things that may have been missing in those red trades? So like I said here, what was missing on those trades? If you find that you're missing the same thing in all of your stop losses or majority of them, then obviously try to avoid as many trades as possible that don't have that missing thing, because your data is telling you if it's missing this specific thing, there's a good likelihood that it's going to be a red trade. So now coming into the next week, you need to see those specific things, whether it's volume, futures, no pullback entries, so like a specific, you know, bounce at your key level, something like that. You want to see those things, and you need to check those boxes off to take a trade in the next week. And what were some indications you saw that told you to take the green trades? So these are just, you know, factors that you see that allowed you to consistently take green trades in the last week or last couple of weeks. Obviously, if you see those things again, then those are some, you know, that's going to be something that you want to take advantage of in the coming weeks. And this is arguably the most important, is going to be setting goals for the week. So for me, my goals are generally based off of my, you know, how I'm going to adjust to the market, because I already have rules and principles of my trading overall. So when you're setting goals, you basically want to identify what are going to be the most, or what's like the most or the second most important factor that has either helped you stay green or took away from a lot of your losses. So it might be one thing to fix and then one thing to continue doing. If you're doing very well, sticking to your pre-market plan, for example, that's going to be one goal, is to only trade your pre-market plan. If on the flip side, most of your losses were when your stock had no volume, then that's your second goal. Don't trade when your stock has no volume or very low volume. Um, Setting one or two very specific goals is going to help you focus on that, and it's not going to be overwhelming. If you have 5-10 things to kind of keep in mind, plus you're trying to, you know, look at the market and really analyze what's happening, read price action, there's going to be too much going on. You're going to forget one or two things. But if you only have one or two very specific goals for the week, it's going to be very easy for you to keep that in mind and know, okay, there's no volume, I'm not going to take this trade here. Regardless of how it works out, knowing that you're sticking to your rules and your goals is going to be much more beneficial in the long term. It's just practicing discipline, and trading based off statistics. So when the statistics say you should be doing X, Y, and Z, and then you're doing A, B, and C, then obviously, you know, you're not performing to the best of your abilities. You're going against what, you know, your trends are saying. So that's why setting goals is going to be pretty important. What I recommend is writing them down and looking at them before market open. Basically, I look at it while I'm setting my pre-market ideas, so I'll know what it is I need to do in the coming week, and the actual trading day that we're going into, just because I'm seeing the same thing every single day. And it helps you have a structured strategy. So, like I said, when the market is adjusting, yes, you're going to have your rules and principles overall, but there are going to be these small little tweaks. And that's what these goals are going to help you fix, is these little tweaks when, you know, maybe the market's slow, so you might not want to hold all the way to your biggest target. You might just want to take the scalp, for example. Yes, what I just said. So good way adjusting to market conditions. But yeah, this is basically what I do to prepare for the week. I always do this, you know, Sunday night, just to kind of reflect and see how I did in the last week, see what I need to do in the coming week. So if you guys like this video, make sure you leave a like down below, and let me know in the comments if you guys, you know, reflect every single week, maybe do it every month, and then if you actually actively set goals to improve your trading every single week. So let me know in the comments below how you guys think about that. So see you guys soon. Peace.